Welcome to the Techno Fundamental Report for July the 3rd. Wishing everybody a great July the 4th. You cannot ignore technology, and the S&P right now, over 30% is technology. Now, if you think about technology, I think Sir Isaac Newton says it best. He says, "If I have seen further, it is by standing on the shoulders of giants." So he's seeing further because he's had the benefit of giants before him, that it becomes kind of almost a continuation of technological developments. Steve Jobs and Bill Gates really kind of got this whole thing going. And so you might want to pause your video player and read this very interesting comment he has made about his final days. He was a great guy. I know he was controversial, but Isaacson's book is awfully good, and I would recommend it to be read. Never invest in a business you cannot understand. Daniel Dunglass Home was alive in the 1800s in the United States and made his name by healing sick and communicating with dead families and friends of his clients. This is, to me, an example of where people will believe anything. Whether it's a crazy investment or whatever, Buffett's advice is very good. Understand the story. And you can, if you don't, you're going to possibly get hooked in by charlatans. I think it's big news. It was announced in Monroe, Louisiana, that Meta is going to build a $10 billion data center, which will be the largest data center in the Western Hemisphere. So this is hopefully a very positive move by Louisiana, but it does show you that the AI data centers are getting built and getting a lot of capital. Now, I know I've talked about this many times in the past, but I wanted to really emphasize how important this is. And when I talk about it with most people, their eyes glaze over. But what I'm trying to say is that we have entered a very interesting phase right here. This is where the oldest millennial turned 35. Now, my daughter's a millennial. Matt Spencer, who works with me, is a millennial. They're spending money on houses. They're spending money on cars. Matt just bought a new truck. You've got a lot of consumption going on. Now, as you notice here by this bar graph, and the way I break it down is phase 1, phase 2, phase 3. So this would be phase 1. This is where the baby boomers turned 35 in 1981. So they started those consumption years, and as a result, we had a very nice bull market. Now, they turned 54 in 2000, and then so be it. We had a bear market, an extensive bear market, dot-com bust, financial crisis, and so forth. But the whole bottom line here is that our country runs on consumption. That's what causes our corporations to make profits. So corporate earnings are a direct result of consumption. So when you start looking at the age groups, here they are, 25 to 34, phase 1, 35 to 44, phase 2, 45 to 54, phase 3. Now this would be phase 3 right here. But we started phase 1 here. So the bottom line is we believe that the oldest millennial will turn 54 in 2035. So that's roughly 9 years from now. So we think this is going to be a bull market for the next 9 years. Another interesting fact, this is the Global Financial Management Survey, and it basically shows that internationally they're very underweight in U.S. equities. Now, this probably has something to do with the tariffs and so forth. But if this money starts to shift back to the U.S., it could be quite dramatic. Now, you can see here with international securities, what I did here is I took a ratio of international stocks versus the S&P 500. Now, realize that when we talked about demographics earlier, the United States of America has the most favorable economic situation in the world, mainly because we have young people that are going to be consuming. Whereas after World War II, 1945 was over, the Japanese did not have a bunch of babies. The Europeans did not have a bunch of babies, therefore they didn't have a baby boom. So basically, international stocks have been underperforming the S&P 500 for 20 years. Well, it's recently bounced up here and broke above that trend line. So is this the beginning of a new cycle? I don't know. It looks like a downtrend to me, and this just looks like a counter trend within a downtrend. We'll keep an eye on it, but I'm just simply saying, for some reason, international money managers have decided that they need to be very underweight in U.S. equities, which I think is a mistake, and they're going to come back, and that's going to be a major amount of fuel coming into the market. It's just my opinion. Morgan Stanley, Mike Wilson, he is simply saying here, with earnings revision, breath leaves EPS surprise. So what he's saying is that we may be getting ready to get a surprise, a positive surprise in corporate earnings. So you can see here where it's turning up and gaining momentum. In other words, it has improved from a minus 25, and then in April went to just a minus 5, indicating positive momentum. So corporate earnings are critical. So let's take a look at the market itself. As you can see, we continue to feel like this is the final low, the major low. We're in a very nice uptrend, which is now continuing on the NASDAQ. Now on the S&P 500, same story. We got that major low, and we're continuing to be we're making new highs every day. So basically, we're in an uptrend. Now, we got to be positive here. Now, if things change, we'll change. Now, the primary trend is up. You can see here making new highs in the S&P, making new highs in the NASDAQ, above the 200-day moving average. This is a very positive-looking market. New highs on the S&P, you can see here where they're starting to turn up. Now, if you go back and look at the bear market in 2021, 2022, new highs got very low, and then they turned up. Kind of looks like what's happening now. So it looks like corporate earnings are going to be improving and stocks are starting to make new highs. The aggression index continues to look positive, a little bit of a pullback here. You know, we had a little bit of a technology sell-off yesterday, but it continues to be in an uptrend and looks positive. In fact, we've gotten the golden cross on the moving averages. Interest rates continue to be steady. Now, unemployment is fine. We're at 4.2%. Now, we're getting ready to get a jobs report. I can't remember exactly. I think it's next week. It might even be this week. I just don't know with the July 4th holiday. But anyway, point being is interest rates are steady. Unemployment is at full employment, basically, and we're looking very positive here. You can see we're definitely below zero on the power index, which is telling me the Federal Reserve is probably getting ready to cut interest rates. In fact, Powell came out this morning, Jerome Powell, head of the Fed, said he would cut interest rates if it wasn't for the tariffs. Well, you know, they just signed a deal with Vietnam today. They've got a deal going with China. I have a feeling that interest rates are getting ready to come down. Volatility index, the VIX, very much under control, below 21, and we're actually down to a new low, a recent new low. This is the tariff scare. Okay, this is the tariff scare. So looking better, looking better. Now, the thing that's amazing to me is that everybody is bearish. Again, this is the AAII bull ratio. How many people are positive, how many people are negative, and you subtract the two, and you come up with a net number, which is negative, below zero. It basically says everybody's negative. So that means there's a lot of cash on the sidelines. And, you know, the market's making new highs. You would think that, you know, everyone would be getting positive. But, you know, just human behavior. And it's a positive, actually. Now, Charlie Munger is real big on the concept of opportunity costs. He basically says that you need to be very careful of which stocks you buy, because you want to realize that if you buy the wrong one, you have an opportunity cost because you're not buying the right one. So opportunity cost is the potential benefits that an individual investor or business misses out on when choosing one alternative over another. So this is where research comes in, and you really got to be serious about this and understand what you're doing. So if you have any questions, please let me know. Thank you very much.